The balance, as it usually is, lies somewhere between those two poles, realistically. Are people safe and are they fully insured when they go into Airbnb or whatever, obviously, other platforms are available? That has to be the job of the platform to ensure the compliance and that is in place. Ultimately, then it comes down to the legislators, doesn't it? And they've talked and about introducing planning classes, especially for short let. You get into the plan in terms of what is a material change of use, which is normally an argument that has multiple potential outcomes aside from anything else. And of course, then the temptation also becomes for the government or the local authority to see it as a revenue raising exercise, which isn't going to necessarily benefit anybody apart from the government or the local authority. Obviously, I've stayed in Airbnbs and I've been to Airbnbs where the owners have gone skiing for the week because we've had to pay them a load of money because we're in California or something like that. And they've afforded a holiday out of it. I don't suppose they can expense that legitimately against their IRS tax returns or whatever. But I see short let more as a vehicle for when large infrastructure projects are taking place, contractors who are going to be not necessarily so short term lets. They might be over 28 days. That helps with things like VAT if you're doing this on a regular basis. I think you really want a 12-month market for that sort of stuff. So I do operate a handful of them in areas where there are big infrastructure projects going on, things like Hinkley Point, things like the Tees Valley regeneration project that we've talked about before. So I did once have a building where there was a long time between agreeing the deal and then the exchange of contracts and then the completion. It's very complicated. I won't go into it now, but there was opportunity there for a couple of short lets in a location that tourists definitely wouldn't have visited, Duncan.
So there's a lot of discussion about whether GDP is actually a good measure for normal people of, whether their life is getting better or not. And, one stat that you could argue is a more useful indicator would be real GDP per head. And that actually fell. And that was the second quarter in a row that it had fallen. And I think that is probably more of a problem for the government and potentially when you're a landlord thinking about affordability as well,
I
right?
totally agree with you. I prefer the real household disposable income metric, which is a bit of a pedantic point, but I am a pedant, let's face it. But if real GDP is going down and the government is taking more out of your pocket, and they are because of the frozen tax thresholds, apart from anything else, it's like a double dip disaster, really. So, of course, we look at households' affordability when we're looking at setting rents. The market truly sets the rent, but the market can set it wherever it wants. If the tenant can't afford to pay it, it's kind of pointless, right?